So let me quickly introduce the speakers to you. As you can see, from left to right then, we have Khatri, the head of mining EMEA at Canaccord Genuit. We've got Jan Klasen, bringing us the German perspective, the director of KfW, Strategic Investments and Raw Material Fund. Then next to him, we have Benjamin Gallezot, who's the interministerial delegate coordinating the French strategy to secure a supply of critical raw metals, or critical metals, in the services of the French Prime Minister. And then bringing the Italian perspective, we have Alberto Castronovo from the Ministry of Enterprises and Made in Italy. And then rounding off what I think is a star-studded panel for you here after the break, we also have Benedikt Sobotka. Have I pronounced that correctly, Benedikt? Thank you very much. I practiced in the green room. The Group CEO of the Eurasian Resources Group, ERG, and also, significantly, the co-chair of the Global Battery Alliance. So what's our optic for this session? We want to look at these three key national raw material funds and the role they can play in the development of a functional, and I repeat the word functional, EU capital markets for raw materials. Now, we all know about the geopolitical shifts that we've seen in recent years. They're clear. So in response to this, countries like Germany, Italy, France, and a few others are spearheading their national raw material funds with distinct budgets and a robust state aid framework. And we want to investigate those from our speakers' perspectives. But first things first, to frame this session well, I'm going to give the floor, Raj, to you. Can we give him a big round of applause, please, ladies and gentlemen? So Raj is going to compare for us the global capital flows into the raw materials sector. Please.
Great, thanks, David. I think, as I said, this is very much a scene setting on the sector, and thanks to the Bloomberg team, I've taken some of their statistics because they're obviously very good. As we can see, I thought it would be good to sort of set what is the landscape, where are we coming from, where do we need to catch up from? And as you can see, the red is China. I think it's pretty self-evident, whether it's upstream, midstream, or downstream, China remains very dominant. So, there's a lot of catch-up to be done across the value chain as well. So I guess where has capital been raised? So I work at a global investment bank focused on metals and mining. We cover the sector globally, and we will go to where the capital is for our clients. And as you can see, over recent years, just chose 18 months, but I think you go back further, it's been the same story. The market that's been the easiest to raise capital for the sector, we just use the lithium sector here as an example, has been Australia. It's been the dominant capital market over recent years, followed by North America, obviously Canada, US. Europe, unfortunately, is lagging a little bit behind on the capital raising stakes. And then what we thought would be also interesting to do is just talk about strategic activity as well. So not only is it public investment, but where are corporates, where is the strategic investment going into the sector? And as you can see, there's been some global deals in the lithium sector. We're just using lithium here as an example. Big push. There's been in Australia and into some of the LATAM countries. But then once you go beyond that, where we see the most activity, frankly, has been China. So a lot of the clients we talk to who are looking for strategic capital, if the public capital markets are not there, are finding partners in China, especially in emerging markets, because in other regions, Chinese are sort of less welcome, and there's a bit more restrictions on their investment. But you can see in Africa and other emerging markets, the Chinese have been going in, and you can see that from all the flags on the acquirer. So it's again, fairly dominant, and you can see, again, this is sort of not just where they are, but where the future will be. So they're going to continue to dominate the space if this continues. What I thought, just to take it a little bit further here, is we're just stepping back from lithium and just looking at some broader commodities which are important. I know some of the other panels talking about copper, nickel earlier today. What we can see here, and I just thought it would be interesting to see, there's obviously been a big push by some of the global majors to try and get into copper. Obviously, BHP made a big move into Australia with Oz Minerals. Obviously, more topicals. They've been making a move on Anglo-American recently, driven by exposure to copper. So it's a big focus for mining sector. The other thing that I think is worth flagging is there is obviously good impetus now in Europe, lots of very positive discussions going on and initiatives. But what's really interesting is it's not only competitive, but it's getting more competitive. That's just something I want to flag. If you look at the second bar there, Manara Minerals, that's a new entity that's been formed by the Sovereign Wealth Fund of Saudi Arabia with their local mining company. And Saudi Arabia's made a massive push into metals and mining and in strategic minerals. You can see they've already done a $3.4 billion investment into Vale, which is a Brazilian mining company. So some big dollars being raised and focused on the sector from the Middle East. And similarly, also in Dubai, IRH recently put $1 billion into Zambian copper mine as well. So, you know, it's competitive, but it's also getting more competitive going forward. So I think, you know, it's sort of interesting to see, obviously, Canaccord, we're very actively involved across the sector. As you'll see, a lot of these are sort of Australian deals as well. But hopefully that sets the scene for the discussion today.
Thanks very much, Raj. Can we give him a round of applause there, ladies and gentlemen? Thanks for framing things for us. And I think that last message you delivered is very clear. Competitive and getting ever more competitive. So that's our starting frame. So now we're going to move through a series of little brief presentations from our speakers, ladies and gentlemen. First from Jan, giving us the German More Materials Fund. Then Benjamin, from the French perspective, and Alberto also with the Italian fund. And then Benedikt will come to you as well to get the mining group's view on things as well. So let's keep things rolling. Jan, I'm going to hand over to you now and give you the floor.
Thank you very much, David. I'm quite pleased to be in a position to present to you the upcoming German Critical Raw Material Fund, which will be managed by KfW. You all know pretty well, I guess, the KfW IPEX Bank, who is our commercial daughter, being active in debt financing since decades in the mining sector. We have now come up with a new instrument. We are adding this, and this is equity. Why we are doing this? We found in various discussions that there is a need of equity at a point in time when you want to develop your marketing strategy, when you set up the project. And we as Europeans and Germans want to avoid that everything goes into one specific country in the Far East. We want, under the name of resilience, try to secure that there's raw material supply of critical raw materials into Europe, into Germany, even at critical times. That's the idea of the fund. And this is why the German government has set aside $1 billion and is willing to invest that into equity. So there's 3 layers if you want to access this fund. First, the raw material needs to be on the EU list of critical raw materials. Second, there needs to be an offtake agreement. I know this is new to the industry, especially in battery markets, stuff like this. They normally have short terms, 3 years. They not the one you know from industrial metals. But there needs to be an offtake agreement of the final product produced from the project we are investing in. That's a quid pro quo. You're getting the equity in exchange for delivering into German, European production sites the material you're producing. That's a quid pro quo. And the third layer is we want to be a minority investor. So we're looking at 25%-ish investment into a project which has a dominant 51% plus owner who is the industrial leader. So we need to have someone who is knowing what he's doing from a technical perspective, who is running the show. And then we will be the accompanying investor, helping the project, which is just below the table, to help as an anchor investor to become it on the table and coming to reality rather soon. This also defines the point in time when the government is willing to invest, when about the marketing strategy is about to be defined. So you need to have some form of feasibility study, whether it's the definite or the bankable. Somewhere in between, there's a gray zone when it's decided before you make the judgment where to sell your product. And whether it's a mining, a processing, or a recycling project, that doesn't matter. In all of these sectors, we will be active with an orientational investment somewhere between 50 to 150 million for each single investment. There can be deviations. For example, for 150 million, you normally own the complete recycling project. In mining, that's close to nothing. So you need to find out what kind of project, at what stage you're investing, maybe starting to a bit less, then committing yourself to the upscaling and growing of a project. Why we have some kind of minimum, because the due diligence work is costly and you don't do it for 10 million. Lastly, the final decision will be taken by an intergovernment body that's called a raw material committee, formed by the Ministry of Economics and by the Ministry of Finance, where we present the projects we have identified for then form from long form, a short form list, where they then have to take a look, project 3, 5, and 7 KfW, go on and negotiate all of the commitments, all of the contracts, and show us for final approval. And the final word is, you will know when this comes into reality, when there is a press conference from the State Secretary, Mrs. Brandner, together with our CEO, Stefan Wintels. Then there's the start. The very same second, our website will be open at KfW, and all of the applications, the necessary documents to be uploaded will be found on KfW website. We are the channel and the single point of contact to help you to bring your project to reality. That would be the start. Thank you very much.
Thank you, Jan.
Thank you.
One super quick question that I hope could have an almost 2 or 3 word answer. When?
Prior to summer, depending on politicians, but prior to summer.
Prior to summer, 3 words. Perfect, thank you very much. Right, that's Jan then giving us a really clear overview, and thank you for those 3 really well explained layers about the German Raw Materials Fund. Benjamin, I bring the optic to you now to give us the same for the French fund.
Thank you very much. Thank you for the invitation. First of all, the question of financing was at the start a very key point of our critical mineral strategy. Mm-hmm. And I can remind you of what we call the financial toolbox we have designed. In fact, we have 2 kinds of instruments. The first one is something like subsidies. Mm-hmm. Dedicated to project in France. We have a 400 million euro France 230 scheme. Already 2/3 of it are invested, but there can be a new project. And we have a tax credit, which is dedicated to battery value chain and the renewable industry. The renewable energy, excuse me. Then we have a financing instrument for projects in France, in Europe, and abroad. Mm-hmm. 2 of them. One is loan guarantees, and these loan guarantees can help guarantee bank to finance this project. And the second one is the Critical Mineral Fund. So it's a fund, a private-run fund by a company called Infravia, and the people from Infravia are here today at the EIT Summit, and I invite you to discuss with them. So it's a fund that is going through the value chain, from the mining to the recycling and including transformation and refining, mm-hmm. For all kinds of critical minerals, but with a strong priority for energy transition, electronics, and aerospace and defense, which are, of course, a very important industry. The French government is providing 500 million euro to this fund, and Infravia is looking about private investor, whether they are financial institutions or industrial partners. And the goal is to reach a 2 billion euro overall amount. It's a very long-term fund. At least 20-25 years of investment, because you have to be, I would say, a patient investor in this field. Mm-hmm. This fund will take a minority stakes in projects. So just like a KfW fund, there needs to be an industrial operator to run this fund. The investment decisions are taken by the team of Infravia. The French government has no role in taking the decision of investment, but as we are a key investor, of course, we bring our expertise and our advice to the Infravia team. Of course, there is a strong point on ESG standard. The idea is to put the best standard available, I would say, on the market. And the strategy is to create a link between these industrial projects and the downstream industry. It can be through an offtake agreement, but it can be through other means. So there is flexibility in that area. And the downstream industry is the French industry, but moreover the European industry in general, because all these industries are interlocked, so there is no possibility to distinguish clearly this aspect. So with this overall strategy, the teams of the fund are already looking for projects. They have several projects, and they will start their financial decision in a few weeks or few months when they have closed the financial part of the fund.
Okay, thanks very much for a really clear overview there of that particular fund. So Alberto, I'm going to move on to you now, having heard now from the German perspective, the French perspective. Let's bring in the Made in Italy, the Italian perspective as well.
Yeah, thank you, David. So the Italian perspective, it's, well, we have, the Italian government has established by law the National Fund for Made in Italy. That was in December last year. And the mandate of this fund will be to support the national strategic supply chain, also, of course, with reference to the critical raw material value chain, so mining, transformation, and recycling, for the speeding up of the energy transition process and by developing the circular economy models. The fund has been funded, so the endowment of the fund is of 1 billion, and the law foresee an equal contribution from the private investor of at least 1 million, at least. So we foresee a pipeline of project, a beginning of pipeline of project that will be at least of 2 billion. The type of intervention will be mainly equity investment in various forms of equity investments, of course, either directly then indirectly. So it will act either as fund of fund, then directly when we want to be strategic with our action. The priority sector, as I said, are for sure the critical raw material, but also the circular economy and the energy transition. But of course, for us, CRM will be strategic for this fund, and this will be the top priorities for our government. Other priorities for our fund will be we will invest in high offtake agreements for sure, and in projects where there will be a low maturity of the project. We don't want to overlap with the market, and we want to intervene where there is a gap from the market. Okay? We will operate through 2 asset management companies. One will be dedicated to the mining projects, because we believe that on the mining project there is also an aspect regarding the land use. So we have an asset management company specialized in that kind of sector. And regarding the industry, so the transformation and the recycling, we have another asset management company that will operate on that side of the value chain. We will invest national and international, also considering what we will need to do with our partners, because we believe that this project should be a collaboration with other partners. And we, just to anticipate your question, we will be in operation before the summer break.
Thank you. It sounds to me there's going to be a lot of action here on this front before the summer, and I'll be pleased to see it as well. Okay, so then, Benedikt, coming to you, what's the mining group's view on what we need for the capital markets to be effective in the sector?
Well, first of all, I started in my role about 11 years ago. When the mining industry, those were the guys from the dark side of the moon, right? You would never be invited to a meeting like this. Yeah. And certainly not invited to a meeting where 3 governments are threatening to give you money. Right? The world has changed. It's quite exceptional. Now, Europe is in a way, is fascinating because it's the historic source of mining, right? And it was the builder of nations, whether it's the Austro-Hungarian Empire, the Swedish Empire, or if you want the industrialization with coal in Britain, that led to the large British colonial empire. Mining was always at the base of that, but it dropped over the last 150 years from something like 50% world market share to probably 5% market share today. What worries me more, that exploration spent, which is an indicator of future mines, right? Because if it hasn't been found today, it's not going to give any mine within the next 10 years. So exploration is an indicator for future mining industry. The percentage is less than 3%. So Europe may have some very good operators, very good mines, but is not able to attract funding into exploration. And that's a real challenge because that means Europe is not going to have mines in the next 10 years as the existing mines deplete. Now, what's fascinating, if you look at the 10 biggest mines in Europe by tonnage, production tonnage, 6 are coal mines. There's 1 base metal mine in Scandinavia, 1 base metal mine in Poland, and the other 2 major mines are owned by Chinese companies, which most people don't know, right? So Chinese investments are actually having a positive impact when it comes to building new mines, because the 2 new largest mines in Europe were actually built by Chinese companies. Now, what's fascinating is, why doesn't the money go to Europe? The mining industry is not poor, right? Big mining companies, on average, have something between 30 to 60% gross margins. So there's money, but why doesn't the money go to Europe? It's a good question. If I speak to colleagues in this industry, and I certainly don't speak for the industry, but what I hear, and roughly out of 100 major mining companies, only 15 have any kind of operation in Europe, right? It's just not a continent the mining companies have gone to in the last 10, 15 years, because other areas are more attractive. Why are they more attractive? Right? They're more attractive because, for example, there's a centralized cadastre of mining permits. There's no European cadastre for mining permits, right? Which is online, and you can go from anywhere in the world and click on the mine in Cyprus and go to the next page, you click on the mine in Sweden, and then you click on the next page, you're on the mine in Spain. It doesn't exist. It should exist. If this is one region, it should have a centralized cadastre. Many of the mines here in Europe are historic mining operations that were mined either during Roman times or during the industrialization or during the Second World War or more recent, but that means they have liabilities, right? Particularly if they're sulfide mines, and for the geologists and mining engineers, you will have acid mine drainage and other contaminations. It is not always clear what happens with that liability, so that scares away investors. In many regions in the world, those historic liabilities automatically become a liability of the state, right? And I'm not defending the mining companies that operated 20, 50, 100 years ago. Often there were not private companies, but state-owned companies. Norway, for example, is a good example. The historic mining obligations are an obligation of the state and not of the private company. What is also interesting is that we don't actually have a lot of junior mining companies. It's fascinating. The top 10 mining companies that are somewhere between pre-production feasibility, 9 of them in Europe have a judicial challenge, right? And that's not unusual. You have that in Canada, you have that in the United States in particular, you have it in Australia. But the track record and the experience of actually going through these judicial reviews and challenges from all kinds of stakeholders is an established process, and it takes time. But in Europe, in many countries, there is no blueprint, because in most countries, they haven't actually opened a mine in the last 10 years. So, of course, you have to work and you have to think, is this how we're going to overcome these challenges? And funding from governments is great because it signals to all stakeholders that the government, which effectively is everyone in that country represented, is supportive of this activity. Because most people have never been to a mine, and I always invite people, come and visit. Right? The mining company that does not let you visit its mines, you should be worried about. Right? Go and see what these actually look like. And when the government sends the signal, we are supportive, we like this, we're interested, and we think it's important, and we're willing to put money behind it, I think that's a game changer. Now, the challenge with money from governments is that you always get cowboys, right, that try to get the money from the government. And this mining industry is full of cowboys. It is a lemon industry, right? We are reviewing thousands of projects a year. We pick 1 out of 100 projects because 99 are not competitive projects. So if you have a mining industry in Europe, which only probably has about 300, 400, 500 projects that are probably in that development stage, only 10 of them may ever make it to a mine, right? 90, 190, 290, wherever it's going to be, are never going to be a mine. So we just have to be realistic. All this funding has to be deployed in mines that make sense. Because it doesn't make sense to have a mine that produces at 12,000 tons dollar copper price, right, when the world market average cost is 6,000 or 5,500, whatever the price might be today. So ultimately, this funding has to go on operations that make sense. Otherwise, they just create inflation, or what somebody called it greenflation, as the energy transition creates more demand for metals. So it's an exciting junction. The fact that we're having this conversation is fantastic, because it shows that the government and the governments, even though not Europe, that's interesting. There's no one from Europe here. There's every individual countries that are taking this forward, and I think there should also be a European response, because when everyone who looks at Europe, they think of Europe as one homogeneous block, and I think that's important that there's also a European commitment. And it starts with not just funding, but the governments also need to explain to its population that mining is important. Right? There's an interesting, the ICMM, for example, has this nice little leaflet. It's a children's book, like a comic, and explains to children what is actually mining, what is it, right? And it's a lovely cartoon. I recommend it. You can, I think, buy it for a couple of dollars. And it explains to children why mining is good, why is it important, why can it be done sustainably? Because again, if you're a European consumer, the best guarantee for getting a product that's been mined with standards racing to the top as opposed to racing to the bottom as the supply chain expands, the best guarantee is to have it in Europe, because the standards are very high, right? It's easy to buy something from a dirty country, from a dirty operator, and it's cheap, yeah, of course. But if you're able to build it in Europe, you can be sure that it's probably one of the best standards you can get in the world. So that should give consumers comfort. We just have to explain it. We have to bring that message across. And Dave, I know you're looking at me already. I can go on for days on these topics, so please interrupt me.
And I will bring you back in for minutes rather than hours or days afterwards, Benedikt. But thanks for your perspectives there and some really clear points around a number of key issues that we'll pick up on more. Raj, I want to come back to you now. Now we've moved our way across and heard a range of different views. We've heard from Benedikt some things already from his perspective about what's needed to bring that capital to Europe that you so clearly outlined before is not flowing there at the moment in the way we need it to. So what will it take from your perspective, building on what we heard from Benedikt and what we heard, of course, from our 3 different countries there as well? What will it take for European capital markets to invest substantially, not invest, but invest substantially into the metals critical for the energy transition in Europe?
Yeah, so I think Benedikt articulated it really well. I think the biggest concern we get when we talk to the global investment community about investing in Europe is still continues to be permitting. And I know there were some comments about trying to streamline that, and but still, it's still a concern. It's I think as Benedikt said, it's not clear, at least at the moment, to a lot of people what the pathways are to investments and how quickly the processes can be. And I think that's a massive deterrent. And it's a bit of chicken and the egg, because you need the mines in Europe to get the investment into Europe. So, I think the fact that we have, a number of the governments represented that are willing to put the money where the mouths are, if that can be followed through with real policy decisions on permitting and releasing that process and making it a lot less complicated, and I think that will help attract capital. And I think the general conversation around this, and as Benedikt said, maybe cartoon books or whatever it is, but the messaging that mining isn't a bad thing, it's actually necessary for us to meet our sort of targets in the future for energy transition is important. So I think we need to amp up that messaging as well.
Yeah, we touched upon that in an earlier session, and we heard a clear message from the president of Euromines on that, around that challenge of social acceptance and the need to build that as well, and linked in with the social license to operate, of course. Okay, great. So moving on, Benedikt, I'm going to come back to you. In fact, I said I would, and I will. So many of the critical raw materials are not mainstream commodities. So large mining groups, will they engage, or will these things be the realm of the more junior miners in a sense?
That's a big question. I don't have the answer. The challenge really is that, particularly when it comes to battery materials, the inherent technological risk for the commodity, for the supply-demand picture is massive. Right? We've seen it. And who knows how much lithium the world will really need 5 years from now. Today, I came back from China last night, and there already are cars being sold in China that have a sodium-ion battery, right? So who knows what the chemistry is going to be? We believe the only commodity that is technologically agnostic is copper, right? Because you need to move the bloody electron. So that's kind of a winner. But all the other products, all the other niche metals, and they're called niche because they used to have a very small application space. Lithium used to be used in glass making, right? That was the main use. And suddenly something else comes along. Cobalt used to have industrial application. Now there's a big use case for cobalt in batteries. So the inherent technological is very large. And the markets are very small. Like the copper market is about 30 million tons. The lithium market is, I think, 0.7 million tons. Those are tiny little markets, $7–8 billion a year. There's a lot of noise about it. And of course, banks have all these nice pictures about the deals, but they're all very small deals, and they're hyped up because the price went up. Now, as you could see, is the battery industry, and those are very far-sighted, very strategic thinking, large corporations in that space. First of all, they integrate upwards, right, upstream. So companies like CATL have their own participations in lithium mines and in cobalt mines and in nickel mines, right? They don't wait for the Western mining companies to get involved. To give you one statistic, last year, Chinese companies worldwide added 35% of world's incremental copper supply and 100% of world's incremental nickel and cobalt supply. Right? So everyone talks about the energy transition, about expanding mining, and it's actually the Chinese companies who are doing it. And that's not just in mining, that's also in the green energy transition. There's one number that I find staggering is China installed more photovoltaic cells last year in China than the US has installed in its entire history, right? In 1 year. The same for renewable energy in general. It's installed more capacity in China last year than the entire electricity generation of the African continent in 1 year. Right? So China is doing it, and I think we can learn from that. And when it comes to these niche metals, it is very risky, it's very volatile, and it's very small. It doesn't move the dial for big companies, so it is a space for smaller and junior mining companies. But it doesn't tell us that there can't be large companies in lithium and in graphite. They just have to consolidate. The problem is most of those companies are currently single project companies. I think we're going to see a lot of consolidation in that space because you need to have certain scale to be a proper company with all the requirements, particularly when it comes to standards. So I think, yeah, you're right. It's a difficult bet to make, and that also makes it very difficult for government funding to bet on the right product, because if we don't know, maybe the governments are much smarter on betting on the next battery chemistry in 10 years from now. I don't know, maybe not, right? So it's be very important to see is there's a commodity risk in addition to the project risk. And believe me, the mining people in this room here, there's plenty of other risks that are just in mining itself. You don't have to add on top of that the commodity supply-demand risk. So I guess the glass is half full,
That's
half empty.
actually, almost technically it is. Well chosen, my water at this stage. It's almost as if I knew you were going to say that. Okay, I didn't know. Right, I want to come back to our three funds now. So Jan, Benjamin, and Alberto. And I want to just dig a little bit more to understand a bit your prioritization behind things. Benjamin, you clearly noted a number of sectors you're prioritizing in the fund. You both, also Alberto and Jan, touched upon this. Perhaps Jan and then Benjamin and then Alberto. Just share with us a little bit more, where are you targeting the most, and particularly why with the funds, if I can?
Well, we certainly have the highest priority on resilience. So that's the quid pro quo. The more of the critical raw material, the safer, the longer this project can provide to a German or European production plant, the higher it is on the agenda that it's interesting enough for an equity investment. That's really works together.
Okay. And Benjamin, from your side?
So first of all, as I said, it's not the government that will decide everything on this subject, and I think it's important because it's a fund designed for the need of the industry, not for the need of the government. Yeah. Clearly, there is a strong point on the energy transition minerals, and as it was stated before, copper is clearly one, I would say, universal metal, and it's clearly a great challenge for all the mining industry and all the industry in general to have sufficient copper resources. The battery metals, including the question of what kind of chemistry. So it will have to be diversified. It will have to be resilient also. We have the question of the rare earths, and especially the rare earths for permanent magnets. They will be used heavily in the automotive industry and in the windmills industry. And then we have a vast area of smaller metals for the digital industry. I would say it's much more difficult to prioritize in this area. Sometimes there are very small quantities. Yeah. So maybe we don't need billions of euro investment in this area. As I mentioned, aerospace and defense is clearly one important, and you have several metals included in that area. It's a strategic one for the sovereignty of Europe, so we have to invest in it. So I would say these are the priorities, but I'm not too directive on that because we have to be flexible, we have to adapt. And as I said, it's a long-term fund, so it will not invest everything in the first years. It will make progressive investment, looking at the evolution of the markets, and then the asset will be run on a long-term basis. So we have to be resilient. We have to be to keep our heads cool, even if, of course, there are some short-term things like lithium that have to be done clearly.
Okay, clear. And Alberto, same idea coming on to you in terms of the strategic prioritization you've put in the thinking behind where you're targeting the funding.
Yeah. As Benjamin was saying, we need to be flexible in this moment because we are at the beginning and we are structuring our strategy. But we are starting talking with our enterprises. So we are studying with the Politecnico di Milano the need of the Italian industry. Specifically, we have focused 5 sectors, which are automotive, aerospace, defense, digitalization, and energy transition. And starting from that, but it will not be only that, we will put the fund at the service of the Italian industry. This is the aim of the fund.
Yeah, and one clear commonality is, I'm sure we'd all hope to see in these funds, is that idea of the flexibility and their ability to evolve and meet, obviously, business need. Okay, I want to also raise a question again for the 3 of you just quickly. And it's a point that was perhaps raised a little earlier as well by Benedikt. If we look at the idea, I pick up on your comment, Benedikt, where you said we've got 3 countries on the panel here, but we haven't got a European voice, although we've had input from that earlier in the summit, I have to say, particularly with my interview with Vice President Šefčovič at the beginning. But still, these funds, is there a risk these funds might be competing with each other a little bit?
I think that would be the wrong part if we start to compete amongst each other. That would be really wrong. We should cooperate for the benefit of Europe. We can, for example, define joint lists of information packages. Each of us will take its own decision. But don't presume that we will be fighting over each other, stamping which equity to put, please take my one, and to have a competition, which will end to race to the bottom.
Yeah, clearly I think it would be a
look to cooperate
counterproductive thing.
with my colleagues here.
But please, Benjamin, yeah, and then Alberto as well.
Yes, first of all, our three ministers of economy met something like 1 year ago in Berlin to discuss this subject, and they were very clear that it has to be cooperative, not competitive.
Yeah.
There are differences. Each nation state has structure its own way. I have no comment on that. It's normal. It's, you know, it's public money, so it has to be run on the basis of what each government says. But clearly, our intention is to cooperate between us, but also with the European institution, because as it was said this morning, there will be strategic project, there will be all these other kind of funds. The equity part is important, but then you have the banking part. So it will create an ecosystem. The team will discuss between them. They will be able to exchange some information. At the end of the day, each entity responsible for the investment will decide on its own, but provided, and it's our strong will that they have exchange and they have exchange data, exchange projects, I don't see any concern about that. Okay. And the second point, the world is very, very big. The world of mining is very, very big. So there are huge investments to do. So sometimes they will, I would say, co-invest in some projects. Sometimes they will invest in different countries. And, you know, we need all that kind of investment, all that kind of expertise. And I think it's a good thing to have this diversity and to have all these governments working together to develop these investments.
Yeah, and a clear point from your side there about, as we stand and looking at some of the things we've heard already about capital flows of investment into Europe, it is a big market at the moment. So perhaps for the early years of these funds as well, I think the ability of the market to absorb this kind of funding is very large, in fact. So Alberto, is anything you can add to that?
No, just the most has been said. So I would like to say that there is, I don't think there is space for competition. I mean, there is just space for collaboration, because, as you say, the market is so huge that there is a lot to do for everybody. Our three nation has a great collaboration. We have a monthly meeting. We have tomorrow another meeting focused on critical raw materials, and we have very good alignment, and we believe that there's a lot to do and a lot to work to do. So.
Okay, clear from your side. I've got one question for Raj and Benedikt, and then I'm going to wrap up on this panel. So my question for the two of you, and Raj, I'd like you to take this first. We've heard a lot about these funds then, we've heard about the need for investment, we've heard a lot around that scenario. I don't like yes-no questions because I find that lack nuance. So I'm not going to say, do you think, but to what extent do you think that these funds can be the beginning of a bit of a snowball effect? You mentioned chicken and egg before as well, about European capital rolling into the raw materials sector.
Yeah, and I think you know, we've actually spoken to some of I guess some of the teams that are being funded by the various governments here already. I think a lot of it is actually just sort of delivery and speed. I think we'll get the snowball rolling, or whatever the right analogy is. But I think that'll be critical, because I think obviously it's really encouraging to hear a lot of these funds will be formed by the summer, and then actually deploying that capital quite quickly, I think is going to be important.
Okay. And I come to you, Benedikt. I mean, you mentioned before, and our audience gave you a round of applause for it, your comment about how lovely it is to see three national governments on stage with mining, and how that for you is a new optic in some ways, with a historical perspective. Same thing, do you think we've got this opportunity of a bit of a snowball effect coming on here? To what extent can that be the case with these funds?
Well, first of all, I'm not so sure that this is a space that can absorb a lot of capital. So I think you will be competing, to be very frankly, about projects that are actually viable. There are not so many in Europe today, very simply speaking. Why? Because there's a big gap between projects that are today close to production or already in production for expansion. They don't need funding from governments. They're usually well-funded. If they can't raise money in the capital markets, then the project isn't good enough. The market failure today is in the pre-production earlier stage, which are all projects that are not bankable, right? And if you haven't spent hundreds and hundreds of millions over the last 10 years in exploration, but only started doing that in the last 2 or 3 years, you're going to have this big drop between the pre-production companies and the ones that don't need funding. Right? I think where you can have a real impact, and not with billions, but I'm talking hundreds of millions, is in exploration. Supporting smaller companies, bring in something to a feasibility study, because that's where the market failure is. Right? It's not later stage when people can actually access other types of funding. So I think this is where you can have a real impact, and this is where I like what Benjamin mentioned about the ecosystem. Right? We don't have this kind of ecosystem in Europe with risk capital for these kind of companies, with even law firms, right? When we work on European targets, we use Canadian lawyers, right? So we have to create an ecosystem with education, with academia, with tech companies, right? Most of the tech companies in mining, in exploration in particular, that work on machine learning and AI, which is the future of exploration, which is accelerating discovery, right, are in Australia or in Canada. There are very few companies like this in Europe. Why not, right? So creating this ecosystem is more important than a blanket funding approach to companies that I frankly think, if the project was good enough, it could find the money in the market, right? So it's, I was asked to be the contrarian on this panel here, and I think I've played my role. I think that's my chance to get money from those two, I think, are over, so.
I think we could all agree on that, Benedikt, yeah. Benjamin, you want to come in on that?
No, just one comment. It's always very good to have a contrarian in a panel, but we're not talking only about mining, to be clear. The midstream part is very, very important. One of the key questions today is not only where things are mined, but where they are processed and transformed. Of course. And at this stage, it's a different ecosystem than the mining system. You know, the big mining company, they don't necessarily invest in the transformation side. That's one part of the comment. And the second one is, it's a specific case of investment. It's not only investment in an industrial project, but it's investment in an industrial project linked with strategic supply of minerals. So it's a bit more complicated, and that explains why the market doesn't necessarily spontaneously fund this kind of project. Although it's true, and I agree, that we have to develop in Europe much more the ecosystem, the junior miners, all that company. We have to do more on that, but I think we already have a good basis. And I have to see also that in all around the world, we also see European geologists and European bank doing projects and having a real good part on this project. So we really have expertise in Europe. We have to be proud of that expertise. We have to develop it, and we have, you know, and that's one aspect of why I think all our countries decided to put in place this fund. There is also a political aspect. I mean, showing to the European public, our national public, that mining is very important for the energy transition, that metals are key for the energy transition. It's a very strong political gesture that was needed, in my opinion, and it has worth on its own.
Okay. Clear points from your side. So the time's come now then to bring things together and wrap up what I think's been a very productive debate around this topic. So I'd like to go, if I can, Raj, I'll start with you. Benedikt, I'll come to you. And then I'll go Alberto, and then for you, Benjamin, and finally I'll finish on you, Jan. Just with your final reflections and takeaways on what we've been discussing, and perhaps with a forward-looking scope, because we were thinking about how these types of national funds can play a crucial role in developing functional capital markets for raw materials. So with that opting in mind, what would be your key takeaways?
So I think from my side, I think to, as you said, get the snowball rolling down the hill. I think, as I said, it's really, you know, implementation and action. I think it's important. I think that's going to be critical. I think also the regulatory framework, I think, will be important if we can have a strong look at that in Europe. And I think a lot of, what we maybe, didn't come to a bit was obviously a lot of the investments, a lot of the raw materials aren't really in Europe, but sourcing that and as Benjamin was saying, actually maybe processing in Europe could be important as well. So there's different ways that I think the investments can be made, and I think it will be positive if we can see good momentum in short order on that.
Okay, Benedikt, to you.
I believe this is exactly the right direction. I'm just impatient. I would like to go a lot faster. And the fact that we now have these instruments in these different countries, and yes, maybe the European Union hasn't done that yet, I think is exactly the right step in the right direction. I would like more and quicker, and of course the midstream, we call it midstream, is very important. I was referring more to the upstream part. The midstream is important because you also have a situation today where industrial customers in Europe today pay a higher price for raw materials than Chinese customers, right? Because the Chinese market is so dominant that it commands lower prices for most of raw materials in the world, right? Which is an inherent competitive advantage over everyone else, right? It's not a secret. So unless you build a processing industry that's scale enough to be competitive with the processing industries in China, I think you will always miss out in terms of competitiveness, and that's where I think a lot of the investment needs to go, is in refining and processing of metals, which, by the way, is environmentally more challenging than the mining, right? And I think most stakeholders don't understand that investments in refining will create the same issues with stakeholders that you are seeing today in the mining space. So that's a note of caution. But I think it's important that we're moving into this direction. Again, 10 years ago, this was a completely different discussion. So the glass definitely is half full. More of this and faster.
Okay. Alberto, on to you.
Yeah, well, I agree with Benedikt that this is not enough, of course. We need to do more, but well, we at least we are starting. I mean, I'm talking about Italy. We are starting, and so we decided to start with defining and with the fund. We need to develop our ecosystem. As you know, till the 80s, we had a mining industry in Italy that then has been closed. So now we have to work and to start again with the knowledge, and we need the geologists, we need engineering, and we need to do a lot, of course. We need lawyers, and but to do this, we need to work a lot, and also to build our pipeline, because I think one of the most important thing now will be to start defining the project together with the Italian industry and investing in the pipeline.
Okay, clear. Thank you. Benjamin?
So first of all, you have to consider that when you add all these financial efforts done by our countries, considering the fact that there are minority stakes and that in equity minority stakes, and there is a banking financing, so it will be able to fund several tens of billions of euros. I don't know exactly, because it depends on the structure of the project. So it's a significant money on the table. And you know, the critical market, critical minerals market is significant, but it's not, you know, it's not the oil and gas market. It's much smaller. So it depends. For example, copper and aluminium are big market, but if you take some critical minerals, there are small ones. So I think we put on the table the right type of investment facility. So now it's up to the Europe industrial community to bring projects. And one important point, and one very difficult one, is to join the people who are running the project and the off-takers. And that will be matchmaking these two different industries that today work separately, because it's a different culture. Bringing them together, and our fund has been designed to do that, will be, I think, the most difficult thing and the most urgent thing, even considering, and particularly considering, today's market environment. So it's really now up to the European industry to do that work, to bring to us good project, with this alliance between I would say, the upstream and the downstream of European Union industry.
Clear from your side. And Jan, to wrap things up?
I think I heard a lot of issues which boils down to managing expectations. I think it's quite clear that the three of us would need to go back to our capitals with the clear signal, get it done, get started. That's quite important. You're welcome on the market, but be there and get it done. And at the same time, I think it's important also to manage the expectation. It's not only mining. There's also recycling, which is very independent and where we can make a lot of advantages by having the material already in the continent to make reuse, and to process it. Those two items need to be stressed as well. And the third one is to as much as politicians think that this is a big chunk of money they're putting on the table today, given the budgetary constraints, that's true for them. But for the industry, it is an amount of money. So I would really stress what my French colleague said, that this can raise additional money. Where we are minority investors, we ask others to come in as well. So this would be starting maybe midsummer a snowball.
Okay, thanks very much. Okay, ladies and gentlemen, I'm bringing this panel to a conclusion now. So can we give them a big round of applause, please? Look at me. Thank you.